some final thoughts on EM. Going into the Mexican election, a string of elections in emerging markets through the back end of this year. Are you still positive on emerging markets?
Yes, we have been positive and wrong, but we are sticking with that position. I think the underlying thesis was driven by the fact that economic growth in emerging markets is relatively stable, and the dollar cannot strengthen. And what has happened is dollar has strengthened. I think at some point the demand for capital to fund the U.S. deficit will bear on the dollar, and that would be the turn that we are waiting for. Valuations in emerging markets have actually improved a lot, so we are sticking with that position.
Didn't we see that FX-related move to the deficit last year? Have we seen enough of that?
Well, so we saw a little bit of that, but I think we weren't counting on the budget deal last year.
Right.
So the deficit picture has certainly deteriorated. So in that environment, for the dollar to strengthen meaningfully and sustain itself, I think is unlikely in our view.
Positive and wrong, and Oksana, of course, will remind me, negative and right on emerging markets. What's next?
So, I mean, all the reasons remain for why we were negative going into 2018, and was that, look, the Fed is normalizing, and all of the protectionism around the world, stronger dollar, none of these things are going to be constructive for EM at these prices particularly.
Okay.
So when I hear that, as Krishna said, there's still positive sentiment around EM, I struggle to understand what sort of price appreciation can you get from a better pricing of 290 basis points over treasuries. So fundamentals are strong in many parts of that market, and we do not argue with that. It's just hard to understand where will that significant price appreciation come from as the Fed continues to tighten and continues to do all of the things that it's doing, and protectionism continues to rule around the world. And my final point on that is that we haven't yet seen technicals really hurt that part of the market, because we haven't seen a significant amount of outflows. And technicals can do very bad things to a market, as we learned with high yield in 2015 and early 16, where fundamentals were really limited to just the energy part of the market, but everything fell out of bed, and that has not happened in EM.
So, Krishna, really quickly, what's the upside?
Well, so when we say we like EM, it's EM FX and EM local rates, not EM credit spreads, just to be clear.